Okay, so we're in our last week, and it's really basically a wrap-up class. The guys did a great job. I'll be grading the week 5 work today. You'll get that feedback and keep up on the discussion in week 6. That should be a robust discussion. You guys have done a great job in this class. I'm really proud of all the work that you're doing, and very happy with it. But at any rate, obviously, I've hosted these meetings without any attendance, which is fine. I'm doing it at Tuesdays at 11 a.m. Eastern, and I get that 100%. It's just, schedule permitting. But the beauty of the way Rasmussen does it is if you offer the code word, we're all good and we get credit and you get to see what we're doing. So this week is a pretty easy week. Obviously, if this wasn't this was more of a, if we were in a classroom or something, I would basically open this week to Q&A. Anything you wanted to know about modeling or anything else. I got my own plan, what I want to go over with you, which is what I think would be important this week. But at any rate, let me share my screen. And let's get this here. So I want to go over some stuff, but let's just take a look at where we're at. Here are our courses. Here we go. And this is week 6. So basically, the discussion is the main activity, and the discussion really centers around financial modeling is evolving as businesses are able to tap into more data than ever and analyze them to improve performance. It requires connecting the end user requirements with the assumptions, inputs, and outcomes. In this course, you learn the modeling techniques professionals use to enhance the value of the business. Think about your career as a financial professional. What were your favorite techniques you learned in this course? How would you apply them in your career? So, so again, it's a wrap up, and that's this week's code word, wrap up. That would be this week's code word, wrap up. And we already have some contributions by Shaquille, Ashley, and Jeremy, and they're pretty good. Shaquille says, it's pretty much the base of the 3-statement model, links all the financial statements together. And again, if you go to my YouTube, I have a whole section on the different financial, it's an accounting spreadsheet, right? He doesn't think 6 weeks is long enough. And you know what? I can appreciate that. I mean, we try to make these an understanding systematic risk, which I'm glad Shaquille brings up because I want to bring it up too. I can understand where he's coming from. We wish we had more time. A lot of these classes are designed for people that are trying to, increase their skill set, also make it somewhat digestible. So yeah, I don't disagree with that, but I'm glad. Hopefully, you got as much as you can. And what I would suggest, I'm going to make a couple of suggestions, and I'll tell you about those in a minute. But at any rate, if you go to my YouTube channel, remember the keyword this week is wrap up, but keep watching. I mean, I did that, I probably should have waited, but I did that ahead of time. And if you go to my channel and go to my playlist, you're going to see that in the Accounting Academy, not only do I have all of the different break down all the different parts of the accounting spreadsheets, all the stuff that you would see that you'd have to deal with if you're looking at a financial statement, income statements, balance sheets, cash flows. There is also an interactive spreadsheet. So what I'm going to do, because we're talking about it, so this way you could make use of this as you move along, is I'm going to create a document or a folder. That's how you do it. So you can see how I actually put things together. And my interactive active, accounting, spreadsheet. This way, I'm gonna make that visible. I'm gonna save it here. I'm gonna upload it. So I'm gonna go to my local disk. I'm gonna go to users. Well, let's say do it this way. I always have this on the ready. Got so many spreadsheets. It's amazing. But here it is. There it is. So now you know where to find the interactive spreadsheet. Now, what does that do for you? Let's open that. If you open it, it's going to download. And what that does for you is as you're watching these financial sheet, I have different, you have to watch the videos, I mean, obviously. But it's really going to be a great primer. And primer meaning, a review of the accounting process. And then once you open my spreadsheet, and I would save it, I would save it and not edit it because that's going to screw it up. I mean, I didn't protect it, you can do whatever you want with it. But I would definitely download a version of it and not play with it. You got an income statement down here. You got your retained earnings here, and you got your statement of cash flows here. So when you go here, you're going to see that you have sales. And this is basically a model, is what it is. I mean, I put this together, for the benefit of my students, but you have sales, cost of goods sold. And then if you notice, when you subtract cost of goods sold from sales, you're going to get gross profit. And if you follow along, you can see how that works. And then you're going to take out your operating expenses, selling expense, general admin expense, lease expense, depreciation. You're going to get operating expense. You're going to sum those up. And then the product of this minus this is going to be your operating profit. So right there, where your operating profit is. But even better, if you're watching my video, now you could follow along. And it's a great refresher because as you're looking at different spreadsheets, and they can get intricate, they can get really intricate. Now, a small company, if you're looking at the balance sheet of a small company, not a big deal, not very difficult. But let's look at one like one of my favorites, one of my favorite products. I shouldn't have, I really try to be good. I'm a Catholic. Now Lent is coming up. So during the, and again, let me say, I respect everybody's religion. And I respect any belief system you have. And I'm not just saying that because I'm a teacher. That's to me, that's being a good Christian. But as a Catholic, we celebrate Lent. And Lent is like a period that we wait for the Easter season, right? In our faith system, the resurrection. But during this period, during Lent, we have it's traditional to give up something, not so much like a sacrifice. It is sacrifice, but I guess it's more about just it's allowing you to remember, right? To look inward. I think it's more than just giving something up. Is what I'm trying to say. Well, at any rate, why do I bring this up? Because I love Coca Cola. All right, I don't have a lot of horrible habits. I mean, I have a drink occasionally, or I don't have a lot of things I got to give up. I should lose some weight, but so I have to find something that I really like. I'm not a huge sweets guy. I'll take a sweet once in a while, like my wife will give up sweets. But for me, every year I try to give up. I drink probably, and I don't go crazy. I probably drink like 3 or 4 or 5 ounces of Coke, maybe 5, 6 times a week. With a meal or something. So I'm going to give it up. It's a long story short. I'll give it up. It's 40 days, right? It's 40 days, not counting Sundays. It's a whole thing that ties into the Judeo-Christian thing. It's not a religion class, but it has to do with the Passover season too. So they're kind of tied together, obviously. And anyway, that's what I'm going to do. I'm going to give up Coca Cola. So because I really enjoy it. So that would be like something of a sacrifice. Plus, it's good for me anyway. But at any rate, I mean, I've had friends who give up alcohol, and I don't drink that much alcohol, so it's not a big deal. But at any rate, but if you like a drink every night and there's nothing wrong with that, well, yeah, that's a big sacrifice. But whatever sacrifice is, that's how we do it. But at any rate, let's look at like one of the financial statements for Coke. Okay, I mean, I kind of digressed there for a minute. But when we look at Coca Cola financial statement, all right, they talk about their revenues, they talk about their margin, and this kind of stuff. If you gotta really, you should tear it apart because you get some real knowledge when you do these things. They give you a breakdown of where the revenues come from. Okay, that's not going to be traditional accounting statements. They talk about, which is kind of cool, they talk about their performance in each region. And they talk about, let's see what I get to this now. And then you get, there you go, an income statement. And just notice, now Coca Cola, one of the largest companies in the world, it looks a lot like ours. Looks a lot like ours. So we'll go back to Coke and notice they have revenues, cost of goods sold. And that's interesting, you know. Their cost of producing the product is a fraction. I mean, this you don't see every day. Usually cost of goods sold is a healthy, like look at our example, and this is just a made up example, but it comes from I didn't make the numbers up. I made up the spreadsheet, but I didn't make the numbers up because generally what they did in this example, and I use numbers from an example, that's like the average that you would normally see in a company. Just so you know where they came up with it. It's like the average that you should see in a company. That's why I use this example. So notice in our example of ABC Corp, your cost of goods sold, if I was to do a percentage, is almost 66%. But, and this is something I hadn't noticed before, the cost of goods sold is only about 40%, which tells me something. I'm amazed. But then when you drop down to selling general administrative expense, you make up for it. So it obviously, and by the way, you look at the percentage change, which what would concern me here is why did SG&A go up so much? Because gross profit and all these other numbers only changed 17%, which you'd expect, but you got 24%. And these operating charges were just like probably just shutting down plants and stuff. You don't have to concern yourself with these. Of here and it's not a big deal. It's a big company. I mean, for them to close 45 million, they might have closed a factory or something. It's irrelevant. These are the relevant numbers. And professionally, and I'm trying to teach you something here, you would take these numbers out. You wouldn't even worry about them. You would be more focused on these numbers. So obviously, Coke has a lot of SG&A. And probably that means you got to sell the product, you got to deliver the product. Notice in my example, SG&A is a fraction. Because in a real company, it's not going to be that big. But Coke is Coke. And as you read more balance sheets, as you get into more income statements for different companies that either you invest in or you're interested in, you're going to see different kinds of numbers. And then you got interest expense, which isn't a big number because Coke has a lot of cash. That makes sense to me. And then there's their income. And then they have other items like equity, income, or loss. I'm not sure why they have that entry here. It's probably because of, I had a guess. You don't normally see a number this big, but it probably has something to do with overseas translations, if I had a guess. And it's just a pure guess on my part. And then the income taxes come out. And Coke pays a fair amount of income tax. But notice the expenses come out. If they had to pay income tax on their gross profit, it'd be a lot bigger number. So you're learning something. And then their income has gone up this quarter, which is nice to see, obviously, if you're an investor. And then you get your income per share. Going back to my spreadsheet, you get the same thing here. So you really learned something, and it's a great review because let's face it, no matter what you do in life, you're going to be coming across balance sheets and income statements. And then this would be, okay, so this is the unaudited statement of income for 3 months. Got to learn how to read this stuff. And then they give you the 9-month totals. So you start to see that the 9-month total, which is should be 3 times, is 17.9 versus 6. So basically 6, 12, 18. And this is why Coke is a safe stock because it just pumps out a fair amount of earnings without a lot of variability. And It's real interesting, right? Pumps out a lot of earnings without a lot of variability, without a lot of variability. And now you have some interest expense here. And notice it just looks like 3 times, right? Your EPS is $1.71, and for the 3 months research. So you could see why Coca Cola is a low risk stock. And how do we know it's a low risk stock? Let's go to Yahoo Finance for a minute. Let's go to Yahoo Finance for a minute. When we get to Yahoo Finance, put in KO. KO is the symbol. You wouldn't know that unless you're a stock guy. You would have to put in Coca Cola. Coca Cola. Probably whatever CO must have been taken. I forget who was CO, but they took KO. And everybody on Wall Street knows that, that's a Wall Street thing. Notice that the beta for this stock, which is the regression of the Coca-Cola stock price versus the S&P 500, is a fraction. It means when the S&P 500, let's annotate for a minute, if the S&P 500 is moving like this, remember stocks drift upwards, right, because of the time value of money, the value of the price of Coca-Cola is drifting like this. So you're getting less variability. But the reason why you're getting less variability isn't because it's a mathematical construct. It's because Coca-Cola has such steady earnings that you're not going to see that violent reaction up or down when the market moves. So hopefully you learned something here. You're not going to see that violent reaction when the market moves. Because there's no reason when the market is doing really well for investors to buy more Coca-Cola, because let's be honest, it's a very reasonable, and that's not an expensive. Coca-Cola is not an expensive product, but how much could you drink of it? And by the way, if you know anything about following Coca-Cola, one of the things that analysts look at, and that's why I say you got to keep reading and keep looking, because you see how analysts really break it down. They less worry about earnings because the earnings are always pretty steady, and most of their earnings come from the product itself. There's Minute Maid, there's a lot of other things, but a lot of the earnings come from Coca-Cola and Diet Coca-Cola. But one of the things an analyst will keep an eye on is when you're dealing with Coca-Cola in particular, and every company has its own thing like this. Apple will have new product, an airline will have energy seats per mile, but here you're going to get how they deliver it, and that's a big thing analysts look at. In other words, if they're selling more product because of, through like 7-Elevens or convenience stores, that delivers more profit to them than if they sell by the can, which is a cheaper way to buy Coke. So that's something, if you follow Coke, analysts look at. So let's compare Coke to, say, the S&P 500, and that's neat about one of the nice things. And the S&P has been up 11%, and notice Coke kind of tracks it. I mean, you can really see the symmetry, but Coke is only up 6%. And that makes sense. Coke shouldn't be up as much as the market. And that's why, my friends, Coke has the low beta, which means that it's going to move at a much slower variability to the regression. Okay? That's what it means. Because the income is more certain. Remember, variance equals risk. So when you model things, you're doing statistical analysis, you're looking for less variance, and less variance implies lower risk. But in this case, the numbers themselves reflect the prices of the stock, and the prices of the stock tell us. Think of the stock market as a voting mechanism, and the prices of the stock that everyone's voting with their dollars tell us that there's less variance because investors are not buying it when the market goes up more than the market. They're not selling it more than the market goes down because they figure people are still going to drink some Coca-Cola. This is a great example of how to read a balance sheet, how to tie it into the market. So beta is a big number because we know through the capital asset pricing model, we have to plug that in order to get a required rate of return. So going back to Coke, now you're going to get balance sheets. And there you get its cash on hand, marketable securities, inventories, all your balance sheet information is here. And if you go to my spreadsheet, go then go to the balance sheet, you're going to see the same numbers. So I have to be honest, it pays for you to take a few minutes and do this because you will pick up a lot. Will pick up a lot. Very interesting stuff. And then finally, you got your statement of cash flows. So you will pick up a lot. I'm not going to lie to you. There's a lot here. Finally, you got your statement of cash flows. It's not an accounting course, so I'm not going to get into it. But the statement of cash flows basically adjusts for the actual cash that comes in. Because there's a lot of non-cash activity that happens in a company. For instance, depreciation. We depreciate an item that we bought, a capital product. We know that that's going to be positive cash flow to the balance sheet, but on the other hand, it's going to be not a actual cash outlay. So they get into that. Income, depreciation gets added back in. And then the subtractions are things that went negative for that period. So they purchase something that's a negative. They probably built factories or buildings. Coke is always doing stuff. But then they're getting proceeds from the disposal of things they're selling. So that's positive. So if you follow through, you're going to see it's a little more intricate. And then they break it down by segment, which is really, I think it's fascinating. You could see revenue per segment. So notice, I don't have that on my balance sheet because I don't have it, not the international, the multinational. But notice most of their money is coming from North America. And that's for 3 months. But if we go to the 9 months, which gets us up to the third period of the year, you'll notice that North America and Europe is a big part of their profit. And also their bottling investments because they outsource their bottling. So you can see where their income is driven from. Notice they make a lot more, and I never saw that, I didn't realize this. They're doing much better in Europe per dollar of income than they do here in North America. So the cost of doing business in North America is very expensive. We should know, we kind of know that. And then obviously anybody who's really serious is going to read the footnotes. And footnotes are important. Footnotes are really important because you can learn a lot about a company by reading carefully the footnotes. Some stuff is going to be boring and boilerplate, but some stuff is going to really kind of, well, they talk about the hedging, and remember, you have, we've talked about we talked about hedging in other classes. You'll probably run into hedging issues or the question of hedging, and this is really good. They talk about hedging. And then different tax matters. So good stuff here, really good stuff. And then they reconcile GAAP with non-GAAP, and that's because they do business overseas, so you have different accounting methods. I'm not even going to get into that, but that's a good way to look at a company. That's a good way to look at a company. There's no way around it. It's a great way to view a company. And what I would do is if you're interested in investing or you need to learn more about how to value companies, well, then this would be a great place to start. Hopefully that was a help. It's been great working with all of you. I'll be grading and get everything in by the end of next week and or the end of this week. And we'll be finishing up. We're finishing up. And I'm really thrilled. It has been great working with you guys, as always. It's coming up. Close this. It's been great working with you guys. Always a pleasure. Great stuff, right? One of the nice things that Coke does is they do a lot for making life better in more challenged areas. So and racial equity, which is tremendous. So they do a lot of good stuff. That's why I like the company. I mean, I know the product might not be the healthiest product, but at least, it's mostly Coca Cola. This is their other products. I like something natural, but they really have, they do a lot of good things. Like, I mean, here, they make the water supply better in certain countries because since they're using water, right? That's the main product in Coke. You forget that it's water. They put sugar in. But I kind of like this. I'd like to get one of these. This is kind of cool. It's good stuff. Diversity is important. I mean, I'm not just saying that as a Christian, as a person. It's helpful to sustainability, diversity. These things are huge. They actually have a report on that, and we all can agree on that. I know that. They're their products. They got a lot of products, but I got to tell you, it's Coca Cola. But there are other brands that are relatively important. Look at that, refreshing the world. It is refreshing. These are the different products. Some of these, Barks. I didn't realize Barks root beer, Body Armor, Coke is the big guy. Diet Coke. Dasani, they make a nice water product. I've never heard of this. I've heard of Fairlife. I didn't realize they owned it. I didn't realize they own Fairlife. That's like healthy like dairy products. So you really get, if you take your time, you learn a lot about a company. You really do. Obviously, we know Coke and Diet Coke. Those are the big ones. Fanta. Somebody mentioned that the other day. Fanta. Fresca. These are old products. Gold Peak Tea. Honest Tea they own. Huh. Minute Maid. I knew that one. Schweppes. I didn't realize Coke owned Schweppes. Wow. Not realize that. Sprite I knew. This is I guess, more for the Latin American, like Latinos, Topo Chico. Glass Sue, Smart Water, and Vitamin Water. So really, big stuff here. That's interesting. The one I didn't know Honesty. I see this all the time, and I did not know Schweppes. It's Coca-Cola. All right, and then that's just all of them, right? So at any rate, great to work with you again. Wrap up is the key word. It was a pleasure working with you. Contact me if you need anything. Try to get you working by the end of the week because I have to get grades in. And thank you.